What I'm about to tell you is going to make you uncomfortable, but sometimes the truth hurts, and the truth is this. The middle class as we know it is disappearing. Not slowly, not gradually, but rapidly. And if you're making the 5 financial mistakes I'm about to reveal, you're not just watching it happen from the sidelines. You're actively participating in your own financial destruction. I don't care if this hurts your feelings. I don't care if it challenges everything your parents taught you about money, because what your parents taught you about money was probably wrong. The rules have changed, the game has changed, and if you keep playing by the old rules, you're going to lose badly. For the past 4 decades, I've watched the middle class make the same mistakes over and over again. I've seen good people, hardworking people, intelligent people systematically destroy their financial futures without even realizing it. They think they're doing everything right. They think they're being responsible, but they're actually following a blueprint for poverty. And here's the worst part. They don't figure it out until it's too late, until they're 55 years old and realize their retirement account won't last 5 years, until they're 60 and still making car payments, until they're 65 and can't afford to stop working because they never built real wealth. They just built the illusion of wealth. The middle class has been sold a lie. They've been told that if they just work hard, save money in their 401k, buy a house and live responsibly, everything will work out. But it won't. Because that formula was designed for an economy that no longer exists. It was designed for a time when companies offered pensions, when healthcare was affordable, when college didn't cost more than a house, when a single income could support a family. Those days are gone forever. But nobody told the middle class, so they keep following the same playbook that worked for their grandparents and wondering why they're falling further and further behind. Let me explain what's really happening. The middle class is being squeezed from both ends. Inflation is eating away at their purchasing power faster than their wages are growing, and their expenses keep climbing. Housing costs more, healthcare costs more, education costs more, but their paychecks aren't keeping pace. Meanwhile, they're making financial decisions that guarantee they'll never build real wealth. They're buying liabilities and calling them assets. They're prioritizing comfort over growth. They're choosing immediate gratification over long-term security. And every single one of these decisions is pushing them closer to poverty. But here's the thing. This isn't happening by accident. The system is designed to keep the middle class trapped. Credit card companies want you in debt. Car companies want you making payments for the rest of your life. Banks want you paying mortgages for 30 years. The entire consumer economy depends on you never actually owning anything outright. It depends on you always having payments to make. And the middle class falls for it every single time. They think having good credit means they're financially successful. They think being able to qualify for a bigger loan means they're moving up in the world. But what they're really doing is signing up for financial slavery. They're volunteering to give away their future income in exchange for things they want today. This has to stop. Because if it doesn't, you're going to end up like millions of other middle-class Americans who are discovering in their 50s and 60s that they can't afford to retire, that their house payment never goes away, that their car payment never goes away, that their credit card balance never goes away, and that they're going to work until the day they die because they never learned the difference between building wealth and looking wealthy. So let me be very clear about what we're dealing with here. These aren't small mistakes. These aren't minor inconveniences. These are wealth-destroying, future-killing, poverty-guaranteeing financial disasters. And if you're making any of them, you need to stop. Today, right now, before it's too late. The first mistake that's killing the middle class is the most expensive one, and it's the one that almost everyone makes without even thinking about it. They buy cars they can't afford, not just expensive cars they can't afford, period. Here's what the middle class doesn't understand about cars. A car is not an investment. A car is not an asset. A car is a depreciating liability that costs you money every single month for years. But the middle class has been brainwashed into thinking that their car says something about their success, that driving a nice car means they're doing well financially. Wrong. Dead wrong. Your car says nothing about your wealth. In fact, expensive cars usually indicate the opposite. They indicate that someone is prioritizing image over substance, that they're more concerned with looking successful than being successful. Let me give you some numbers that will make your head spin. The average car payment in America is now over $600 a month. $600. For something that loses value every single day you own it. for something that will be worth a fraction of what you paid for it by the time you're done making payments. But it gets worse, because most people don't just buy one car, they buy two, his and hers. And they trade them in every few years for newer models, so they never actually own their cars outright. They're always making payments, always paying interest, always losing money on depreciation. Do you know what $600 a month invested in the stock market becomes over 30 years? At a 10% return, it becomes over $1.3 million. $1.3 million. But instead of building wealth, the middle class chooses to drive it around town for a few years before trading it in for another depreciating asset. And here's the part that really kills me. They justify it by saying they need reliable transportation, as if the only reliable cars are brand new cars with $600 monthly payments. As if a 3-year-old certified pre-owned car isn't just as reliable for half the price. This is rationalization at its finest. The middle class wants the new car. They want the latest features. They want the status symbol, but they can't admit that to themselves, so they convince themselves it's a practical necessity. It's not. It's a luxury they can't afford, and it's destroying their financial future. But the car payment is just the beginning. Because once you have a car payment, you need full coverage insurance, you need gap coverage, you need extended warranties, you need maintenance plans. Every single one of these costs money. Every single one of them is another monthly expense that never goes away. And here's what really happens. The middle class gets comfortable with car payments. They get used to having $400, $500, $600 going out every month for transportation. And when the car is paid off, instead of celebrating and investing that money, they immediately go buy another car because they can afford the payment. This is financial insanity. This is how you guarantee you'll never build wealth. Because wealth isn't built by having nice things. Wealth is built by owning things outright and then investing the money you would have spent on payments. Rich people understand this. Rich people buy reliable used cars and drive them until they fall apart. Not because they can't afford new cars, but because they understand that every dollar spent on car payments is a dollar that can't compound in their investment portfolio. The second mistake the middle class makes is even more expensive than car payments. And it's the one that traps them for the longest period of time. They buy too much house, way too much house. The middle class has been told that buying a house is the American dream. That real estate always goes up in value, that your mortgage payment is building equity while rent is throwing money away. And all of these beliefs are not just wrong, they're dangerously wrong. They're wealth-destroying wrong. Let me explain something very important. Your primary residence is not an investment, it's an expense. A huge expense, one of the biggest expenses you'll ever have. And when the middle class buys too much house, they're committing to decades of financial struggle. Here's what happens. The middle class gets pre-approved for a mortgage. The bank tells them they can afford a $500,000 house, so they start shopping for $500,000 houses. Because if the bank says they can afford it, it must be true, right? Wrong. The bank doesn't care about your financial future. The bank cares about making money from your loan. The bank wants you to borrow as much as possible because that's how they maximize their profit. They're not your financial advisor. They're your creditor. When you buy a $500,000 house with a 30-year mortgage, you're not paying $500,000. You're paying over $800,000 when you include interest. That's $300,000 in interest payments alone. $300,000 that could have been invested. $300,000 that could have grown into millions over time. But the financial destruction doesn't stop with the mortgage payment. Because when you buy too much house, everything else becomes more expensive too. Property taxes are higher, insurance is higher, utilities are higher, maintenance costs are higher. Everything scales up with the size and value of your house. And here's the trap. Once you're in that house, you can't easily get out because you need somewhere to live. So even if you realize you made a mistake, even if you realize the house is bankrupting you, you're stuck. You're trapped by your own success. The smart move, the wealth-building move, is to buy half the house the bank says you can afford. If they pre-approve you for $500,000, buy a $250,000 house. I don't care if it's smaller. I don't care if it doesn't have granite countertops. Buy the house you need, not the house you want. Then take the difference, the money you're saving every month by having a smaller mortgage payment, and invest it. Put it in the stock market, buy dividend-paying stocks, build a portfolio that generates passive income. Let that money work for you instead of working for the bank. This is what wealthy people do. They live below their means. They buy reasonable houses and then invest the difference. They understand that every dollar spent on an unnecessarily large house is a dollar that can't compound in their investment accounts. Warren Buffett, one of the richest men in the world, still lives in the same house he bought in the 1950s for $31,000. Why? Because he understands that his house doesn't make him money. His investments make him money. And every dollar not tied up in real estate is a dollar that can work harder in the stock market. But the middle class doesn't think this way. The middle class thinks their house is their biggest investment. They think they're building wealth through real estate appreciation. But what they're really doing is tying up all their capital in a non-productive asset that costs them money every month. The third mistake that's destroying the middle class is credit card debt. And this one is particularly insidious because it starts small and grows into a monster that devours everything in its path. The middle class uses credit cards for everything. Groceries, gas, dining out, vacations, clothes, electronics. They tell themselves they're being smart because they're earning points or cash back. They tell themselves they'll pay it off every month, but they don't. Almost nobody does. Instead, they carry balances. They make minimum payments. They pay 18, 20, 24% interest on purchases they made months or years ago. They're paying credit card interest on meals they've already digested and clothes they no longer wear. Do you understand how devastating this is? When you carry credit card debt at 20% interest, you need to earn a 25% return on your investments just to break even after taxes, 25%. When the stock market averages 10% over the long term, you're asking for the impossible. But the middle class doesn't think about it this way. They think about credit cards as a convenience, as a way to smooth out cash flow, as a tool for emergencies. But what credit cards really are is a wealth extraction system designed to transfer money from your pocket to the bank's pocket. And once you start carrying credit card debt, it becomes almost impossible to get out because every month you're paying interest on old purchases while making new purchases. The balance grows, the minimum payment grows, and pretty soon you're trapped in a cycle that can last for decades. I've seen people pay $20,000 in interest and fees on $10,000 of credit card debt. They end up paying 3 times what they originally borrowed, and at the end they still owe money. It's financial quicksand. The more you struggle, the deeper you sink. The solution is simple but not easy. Cut up the cards, stop using them entirely, create a budget and stick to it, pay off the highest interest rate debt first, and never, ever carry a balance again. But the middle class won't do this because credit cards enable their lifestyle. Credit cards allow them to spend more than they earn. Credit cards let them maintain the illusion that they can afford things they actually can't afford. And that's the real problem. Credit cards allow the middle class to live beyond their means without immediately feeling the consequences. They can buy the vacation, the furniture, the electronics, the clothes, and worry about paying for it later. But later always comes. And when it does, the cost is astronomical. Rich people understand this. Rich people use credit cards for convenience and pay them off every month. They never pay interest. They never carry balances. They treat credit cards like debit cards. They only spend money they already have. The middle class does the opposite. They treat credit cards like free money, like an extension of their income, like a way to afford things they otherwise couldn't afford. And this mindset is financially devastating. The fourth mistake the middle class makes is the most subtle, but potentially the most expensive. They don't understand the difference between assets and liabilities. They buy things they think are assets when they're actually liabilities. And this fundamental misunderstanding keeps them trapped in financial mediocrity forever. Let me make this very simple. An asset puts money in your pocket. A liability takes money out of your pocket. That's it. It doesn't matter what it's called. It doesn't matter what society says about it. If it takes money out of your pocket every month, it's a liability. Your house, the one you live in, is a liability. It costs you money every month. Mortgage payments, property taxes, insurance, maintenance, utilities. Money going out, not money coming in. Liability, not asset. Your car is a liability. It costs you money every month. Car payments, insurance, gas, maintenance, repairs, depreciation. Money going out, not money coming in. Liability, not asset. Your boat is a liability. Your RV is a liability. Your jewelry is a liability. Your designer clothes are liabilities. Your furniture is a liability. Almost everything the middle class calls an asset is actually a liability in disguise. But the middle class has been programmed to think differently. They've been told that buying a house is investing, that buying a nice car is a reward for their success, that accumulating possessions is a sign of wealth. All wrong, completely wrong. Real assets are things like stocks that pay dividends, bonds that pay interest, rental properties that generate cash flow, businesses that produce profits. These are assets because they put money in your pocket without you having to work for it. But the middle class doesn't focus on acquiring real assets. They focus on acquiring stuff that costs money to maintain, stuff that depreciates in value, stuff that ties up their capital without producing any return. And here's where it gets really dangerous. The middle class uses debt to acquire liabilities. They borrow money to buy things that cost them more money. They leverage themselves to purchase depreciating assets. This is the exact opposite of what wealthy people do. Wealthy people use debt to acquire assets. They borrow money to buy rental properties that generate positive cash flow. They use leverage to purchase businesses that produce profits. They understand that good debt is debt that pays for itself and then some. The middle class uses bad debt to buy liabilities. And then they wonder why they can't build wealth. They wonder why they're always struggling financially. They wonder why they can't get ahead no matter how hard they work. It's because they're playing the game wrong. They're accumulating liabilities and calling them assets. They're using debt to dig themselves deeper into a hole instead of using it to climb out. This fundamental misunderstanding is what keeps the middle class trapped. They think they're building wealth when they're actually building a collection of expensive possessions that drain their bank account every month. The fifth and final mistake that guarantees middle-class poverty is the most tragic because it's completely preventable. The middle class doesn't invest, or when they do invest, they do it wrong. They wait too long. They don't contribute enough. They panic and sell at the wrong time. They chase performance. They pay high fees. They make every possible mistake an investor can make. But the biggest mistake is simply not starting, not participating in the stock market at all, because they think it's too risky, because they think it's gambling, because they think they need to be rich to invest. All wrong, completely wrong. The stock market isn't gambling when you do it right. It's the most reliable wealth-building tool ever created. Over the past century, the stock market has averaged about 10% annual returns. 10%. That means your money doubles every 7 years. But the middle class doesn't take advantage of this. They keep their money in savings accounts earning 1 or 2% while inflation runs at 3 or 4%. They're guaranteed to lose purchasing power. They're guaranteed to get poorer over time. Or they invest in their company's 401k, but only contribute enough to get the match. They're leaving free money on the table. They're not maximizing their tax advantages. They're not taking full advantage of compound interest. Or they try to time the market. They wait for the perfect moment to invest. They wait for prices to come down. They wait for certainty. But there's never a perfect moment. There's never certainty. And while they're waiting, they're missing out on years or decades of compound growth. Or they panic when the market drops. They see their account value decline and they sell everything. They lock in losses. They guarantee that they'll never participate in the recovery. They buy high and sell low, which is the exact opposite of what you're supposed to do. Or they chase the latest hot stock or sector. They hear about someone making money in tech stocks or crypto or whatever the current trend is, and they pile in at the top. They buy after prices have already run up. They get caught when the bubble bursts. All of these behaviors are wealth destroying. All of them guarantee that the middle class will never build the kind of wealth they need to retire comfortably. The solution is simple. Start investing early. Invest consistently. Invest in broadly diversified index funds. Keep fees low. Don't try to time the market. Don't panic when prices drop. Stay the course for decades. But the middle class won't do this because it's boring, because it doesn't promise quick results, because it requires patience and discipline. Two things the middle class has been trained not to have. So they continue making the same mistakes. They continue destroying their financial futures. They continue guaranteeing their own poverty. And then they wonder why the rich keep getting richer while they stay stuck in place. Here's the truth that nobody wants to hear. Building wealth isn't complicated. It's actually very simple. Spend less than you earn. Avoid debt except for appreciating assets. Buy assets that generate income. Invest consistently for decades. That's it. 4 simple rules. But simple doesn't mean easy, because following these rules requires sacrifice. It requires saying no to things you want. It requires living below your means. It requires thinking long-term when everything in our society is designed to make you think short-term. The middle class isn't willing to make these sacrifices. They want wealth without giving up anything. They want financial security without changing their behavior. They want the results without doing the work. And that's why they're going extinct. Because in a world where the rules have changed, where the old playbook no longer works, adaptation is survival. And the middle class refuses to adapt. They're still following strategies that worked 50 years ago. They're still believing myths that were never true. They're still making decisions based on emotions instead of mathematics. Meanwhile, the wealthy are getting wealthier because they understand the new rules. They understand that debt is a tool, not a lifestyle. They understand the difference between assets and liabilities. They understand that time is their most valuable asset when it comes to building wealth. The gap between the rich and the middle class isn't just growing, it's accelerating. And every day the middle class waits to change their behavior is another day they fall further behind. So what are you going to do? Are you going to keep making the same mistakes that guarantee poverty? Are you going to keep following the crowd over the cliff? Or are you going to wake up, face reality, and start making the hard choices that lead to real wealth? The choice is yours, but choose quickly. Because the middle class extinction isn't some future event. It's happening right now. And if you don't change course immediately, you're going to be one of the casualties. Stop making excuses. Stop waiting for perfect conditions. Stop believing that someone else is going to solve your financial problems. Take responsibility for your future. Make the hard choices. Follow the rules that actually work. Your future self will either thank you for the sacrifice or blame you for the comfort. Which is it going to be?